All right, we are live for this month's Fundera Fireside Chat. As a reminder, this is a monthly series we do here at Fundera to sort of walk through and explore the more complicated parts of getting a loan, where we sit down with a member of Fundera's team who helps tackle this for thousands of small business owners every month. I am Meredith Wood, Editor-in-Chief here at Fundera. And this month, I am joined by Senior Loan Specialist Kate Morgan, who's going to talk a little bit about your personal credit score and how that affects your loan application and what you need to know about how it's pulled and how it's used. So Kate, could you just tell us a little bit about yourself?
Excellent. Well, Meredith, thank you so much for that introduction. My name is Kate Morgan. As Meredith said, I'm a Senior Loan Specialist here on the Customer Success team here at Fundera, and have probably spoken to a lot of small business owners that might be watching this call. So hi to all my friends out there. And if I haven't met you yet, definitely call in because we love to chat.
Awesome. Kate, it's great to have you. I feel like you're a huge resource to me and my team in the education that we build, because you do get to talk to so many business owners, and especially about the topic that we're going to tackle today. So I guess my first question for you is just the whole concept of, I'm a business owner, I'm thinking about my business, but my credit's coming into play. So can you talk about typical circumstances where a small business owner might have their credit pulled?
Sure. I think, probably small business owners are the most familiar with credit card pulls. When you're looking for a new credit card, whether it's an Amex card or a Chase card, your credit will be pulled. So I think that's probably the first place a lot of small business owners have run into this, but other places you might run into it looking for an actual traditional business loan, whether it's a term note or an SBA loan. But also, Mary, it's not even just within the business world. It also happens when you apply for a mortgage. So credit pulls are everywhere, whether you're a small business owner or not.
And so specifically with business loans, why is your personal credit even relevant, and why does it need to be pulled for that process?
No, that's a great question. I think that sometimes small business owners call into me, and this is something where they're curious. They've grown a business, they've incorporated. Why is personal credit important? And the real reason is because lenders make their underwriting decisions based on the risk of the borrower and not getting paid on the money received. So a lot of these small businesses are very closely held. The small business owners are very invested in their business. And so that's why there's a personal guarantee required. And in turn, they're going to look at individual credit scores, because that incorporates your ability to pay back loans that you've had in the past. And that's definitely important to a lender that's going to give you money, whether it be for 12 months, 2 years, or 10 years.
Great. And I feel like there's jargon that's often used when people are approaching credit applications where the lender is disclosing that credit's a portion of it, and they say, I'm either going to soft pull your credit score or I'm going to hard pull your credit information. So can you talk about what the difference between a soft pull and a hard pull is?
Absolutely, yeah. So I think probably most small business owners are familiar with the soft credit pull, whether you're applying for a new apartment or maybe getting a new job and they're going to do a background check. So that is probably the most common place that the kind of general person would see a soft credit pull. But what a soft credit pull does is it typically occurs when maybe you get a credit card offer in the mail for a small business owner, or you look into your own personal credit report. So soft credit pull is something that will not show up on your personal credit report as an inquiry. And so they, at this point, May, are probably, I would say, less common than the hard credit pull. So the hard credit pull, I think, is something that small business owners are more concerned about, because a hard credit pull is something that will show up on your personal credit report. So this is something that other lenders can see as far as how many inquiries have you had in the past couple of months, couple of days, and that is important.
Awesome. And so you touched on this a bit, but I think it's important to address separately as well. So what is the impact of a hard credit pull?
Great question. So typically a hard credit pull will affect your credit score by 3 to 5 points for each inquiry. Now, something that's really, really important to think about there with hard inquiries, though, Mayor, is that when you're applying for a business loan, it's important to understand how many hard inquiries will incur. But also keep in mind that if you're applying for a small business loan, you're doing it in a very targeted fashion, let's say applying to maybe 5 or 6 medium-term loans on one day. The way that the bureaus look at it is the first pull will absolutely affect your score 3 to 5 points, but they understand that you're being a prudent small business owner and you're not going directly to one lender and just saying, hey, what's your price? Like, I'll take it. You're actually being smart, exploring your options, and then making a decision. So FICO, essentially, who is one of the bureaus out there, what they'll do is they'll take a look at what they call shopping periods. A shopping period is typically like anywhere from 14 to 45 days. And if they see multiple inquiries for a similar product, what they'll assume is that you were shopping for the best available option and your credit score will not be affected by, 15, 20, 30 points based on each inquiry.
That's great. And I think just like a good common knowledge thing to do is to talk about is we're talking about business loans right now, but this applies whether you're looking for student loans or you're shopping mortgages or car loans. And I think that that's something that is just really good for consumers to know, in the sense that maybe you're discouraged from rate shopping because you're worried how it'll affect your credit score, but to know it won't. I feel like you're actually losing out on a lot of opportunity to get, like you said, the lowest cost rate out there.
Sure.
And you talked about how hard credit inquiries can lower your score potentially by a couple points. But what about like the process of the pool being visible and to other lenders and them seeing that?
Yeah, so a hard credit pull will remain on your report for a few months. Probably 6 months is a good number to stick with. It will affect that credit score. And it will remain on your report for 2 years. So while it remain on your report for 2 years, it's not necessarily pulling down your credit score as far as the way that the algorithm calculates what that score is.
And with credit inquiries, how long do you usually see, or do you know of that it takes for the credit score to go back up?
Oh, I mean, honestly, Merritt, it really, really varies. I mean, we've had some small business owners that have come to us. One of our account managers yesterday just shared a really awesome story about she had a small business owner that originally came to Fundera, had a weaker credit score, right around a 600, but everything about them was perfect for a medium-term loan. They were just challenged with credit. What was that, back in July? I think that just about earlier this week, refinance with a medium-term lender, significant savings. So focusing on credit is very important. There's very easy ways to get it to increase. So it's just paying attention to it, I think, is the most important part, and understanding that it is very important for a business loan.
Yeah. I really liked what you said there, in the sense of, business owner, you apply for a loan, maybe your credit score is not right where you want it to be, or you didn't even know it was going to be a factor. So you qualify for like a product like a shorter term loan. But because the inquiries made only impact it very little, and probably don't outweigh the fact that you can now monitor your own credit, push it up, are aware of that. So it sounds like, he was able to take his credit and gosh, 6, 7, 8 months time to a point where it put him in a whole different product category.
Mary, I think this guy went from about a 70% APR down to close to like 15%. So that just shows you credit right there is super important.
Yeah, that's crazy.
I know.
What do you think about those numbers?
I know.
So on that same basis, is when should a small business owner not apply to lenders that do hard credit pulls?
Yeah, so I think if you have some other option out there, some sort of loan obligation out there that is more of a priority, typically we'll run into this when a small business owner is waiting to refinance their house or potentially purchase a new home. What happens in this case, if you are searching for a business loan right now and then also applying for a mortgage and you're having hard inquiries, you don't want to affect your chances of getting that really, really great refinance, cash out refi, whatever it is, because the rates on those are fantastic, and that's definitely more of a priority. And so right before a loan is funded or a mortgage is funded or refinance, what the bank will do is they'll do one last credit pull just to double check. That a mortgage can take a bit of time, so just to double check that nothing has changed. And small business owners at times, once they see those inquiries, the bank will say, you know what, this is too much. You've been seeking out a lot of different credit in different areas, and it becomes a riskier file. And that can jeopardize your chances for sure of getting that mortgage. So in that case, soft inquiry is a great way to go.
Interesting. And then in your experience, do you find with online lenders, alternative lenders, a majority of them doing hard pulls or soft pulls? And how does a borrower even figure that out?
Yeah, great question. So every single lender that comes to you should be able to tell you whether you do a soft credit pull or a hard credit pull. Some lenders do a soft credit pull up front and then they do a hard credit pull at the end. So it's very important to ask that, and the lender should be able to answer that very easily. But there are I think it's varying there, honestly. I think that here at Fundera, just to give you like a snapshot of us, I mean, we have one lender per category that does a soft credit pull. So I think, I mean, at this point, I wouldn't say it's 50-50, but very recently we've seen a lot of lenders in our network make that change because they realize that small business owners don't necessarily love the hard credit pull, and they'd be more open to the soft credit pull to explore those options.
That's great. This is great information, Kate, and I think provides a lot of transparency into an element of a loan application that a lot of business owners aren't quite sure why it exists. By far my favorite thing you said is like the importance of the score alone and how it can by pushing it up 20, 30, 40 points, how much it can save you in APR. So on that note, for people that are watching, if you have more questions about your personal credit score and how it could affect your loan eligibility, give us a call at 1-800-FUNDERA. You can talk to somebody like Kate who can provide you some general perspective there. Similarly, on our website, fundera.com, we have a lot of information that kind of provides general eligibility requirements by product and some information in general on what you can do to improve your score. And again, that is someone also on Kate's team that can help guide you through that process as well. So that being said, Kate, this was awesome. Thank you so much for taking the time. I really appreciate it.
Of course. And thanks so much, everyone, for watching. Thank you, Mara, for putting on these awesome Fireside chats.
It is my pleasure. So we will see you guys all next month for our next Fireside chat, but we're signing off for this month. Thank you.
Take care.